Hey traders, welcome back to another podcast at the London Expo, Prop Firm Expo. We have a new guest here who I guess wants to share his story. Can you give us a little introduction to who you are and how you got into trading?
Yeah, thanks for having me on, guys. Really appreciate it. So my name is Anane. I was a maths nerd, basically at school. So I'm a mathematician. I studied at Cambridge. Graduated, started thinking about what I wanted to do next. And I basically loved like following the markets, macro, quant, stats, everything. And then, obviously trading was like a natural next step for me. I worked at 2 quantitative hedge funds. Oh, something going on in the background.
Oh, that's good. It's good.
Okay.
We didn't have a trader who actually traded for hedge funds. So.
Yeah. Okay, cool. Yeah, I mean, I worked at 2 quant hedge funds, one called Flow Traders in Amsterdam, and then another in New York called Tower Research Capital.
Wait, how old are you, sorry?
I'm 27.
Okay, wow, you've gone to New York and...
Yeah. And there's more to come after that. But basically I was working in these strategies. We were basically making models and algorithms that trade automatically on the markets. My firm, my group was making like comfortable 8 figs while I was there, purely algorithmic trading. And I basically was able to do some of it on the side for my personal account as well, and build up kind of my personal wealth through that as well. Not the same stuff that we were doing on there, but kind of related stuff, using statistics, using models, figuring out what we're going to do. And then, I left earlier this year. We got into a startup accelerator in San Francisco called Y Combinator. And now I am building a new futures exchange. So our aim is to bring direct access, unintermediated, no broker access to futures on traditional assets like equities, commodities, FX, gold, whatever, to retail traders. It's the first time it's ever been done. The first time retail have been able to go out into an exchange, place their order directly into the order book, trade futures, which is what we're offering, trade peer-to-peer against each other. And we raised about, I can't say exactly how much yet because we have a press article coming out, but we raised a decent amount of money a couple of months ago. And we'll be live in about a month.
Nice. My first question would be, because a lot of traders, basically their goal is to be on a trading floor, as you were. Can you walk us a little bit through the experience there?
Oh man, it's the best. It's the best.
Yeah?
Trading floor is like the best environment to work in. That's kind of the atmosphere we're trying to create in our company as well. We got house music playing like all day. We got sounds popping off, like everyone just like shouting at each other. Sometimes people put something in like the Slack. I'm like, why don't you just say it to me, bro? So yeah, I mean, it was like the best experience for me that I could have coming out of uni, being in this environment surrounded by like very experienced traders, teaching me the ropes basically. And it's like the best kind of apprenticeship because you are sitting right next to you. Apprenticeships don't exist anymore, right? Like it used to be 200 years ago, if you wanted to like be a blacksmith, you would learn from a senior blacksmith, right? Now you go sit in an office and like you do your stuff on the computer. Trading floor is amazing because you sit right next to guys who've been doing it for like 10, 15 years and they teach you right, they're training you to replace them basically because they want to retire.
Do you have some background education, or how did you get this job? Or do you have like?
I studied maths at Cambridge, so that basically does it. Like if you want to work in a quant hedge fund, you gotta study maths at a top university, or maybe physics or computer science.
Okay.
I was at Cambridge, any kind of like really top university, and then you got to be good. In the interviews, they ask you like advanced statistics questions, computer science questions, and just like fast mental maths as well to see if you can just like think on the spot really quickly under pressure. Working under pressure is like a massive part of it, obviously. So obviously Kate asked me about psychology versus strategy. It is mostly strategy, especially on the quant side, but psychology, you got to make decisions, and like not every decision can be completely data driven. So some things you've got to go with your gut. And that's like a big part of it as well.
What percentage of trades do you have to go with your gut, would you say? Of all the trades that you have, if you round them all up, what are gut trades and what are quant trades?
Are you talking about my personal account or what I was doing at the firm?
At the firm,
Everything was fully algorithmic.
Yeah.
So more making the model and deciding, what products you want to trade with the model, or like, when you design an algorithm, there's some things which you kind of have to go with your gut and see if it's going to work or not. But when it actually comes to trading, it's fully systematic. Now that I do a bit of stuff on my personal account, that's kind of 50-50 systematic and 50% kind of quant statistics driven. Because it's really hard to do everything fully quant on the personal account because you don't have access to the same data and the same infrastructure that you do at like a big hedge fund.
So for those traders that have never, who don't know what quant is, what is quant trading?
So the quant trading is basically it's pretty simple. You basically you get some product you want to trade, usually futures, right? Futures or equities. They're like the two big options as well, actually, that people want to trade. And you basically get as much data as you can and as much granularity as you can about how these assets move over time. By granularity, I don't just mean like, like candlestick charts, right? I mean like every microsecond, how is this thing changing? What's the best bid? What's the best offer? The full spread, the depth of the order book, everything, right? So you get the full, as much data as you can. And then you basically try and make a statistical model to predict the price. And you can't just give the model the price data and expect it to work it out. It doesn't work like that. You basically have to use your intuition. You think, okay, if the thing has been like a really simple indicator, like momentum indicator, right? Like EMA indicator, you basically think, okay, if this thing has been going up and the EMA has been going up for the last, let's say 5-minute EMA looking back like a day or something, then generally it tends to go up. You might have this intuition. Now, what we do in quant trading, which is basically like a more refined version of technical analysis, is we take all these indicators and we mathematically figure out which ones actually work. Rather than just using our eye, we mathematically figure out, what, if I use this indicator every second for the last year, how much money would it have made me? How good is it at predicting the market? What's the Sharpe ratio? It figures out all these statistics. And then the second thing you do is you get all these indicators, you figure out which ones work, you figure out which ones don't work. In statistics, that's called feature selection. Okay, so we call indicators features in statistics. And you basically combine them into a model and you say, okay, this EMA plus this RSI indicator plus this volume indicator, if you combine them with this equation, that's like a really strong way of predicting what the market is. And quant, you don't try and predict too far ahead. You're always scalping. So you might try and predict 5 seconds ahead or something.
And that's why it's important to get the best spreads possible when quant trading.
So that's why it's called high frequency trading as well. Sometimes it's because you're just trading in and out all the time. So, like one of my firms, we were trading on like a really big futures exchange. We were doing like 30% of all the volume that happened on the exchange.
Wow.
Because we were literally just trying to do every trade. Because every time we had an opinion whether the market's going to go up or down. And we were trying to monetize that. And then when it flipped, we were trying to flip our position the other way. And the execution's all done by algorithms, right? So you don't actually sit there and click. The execution is 100% done by a computer. But you're just making the model and you're back testing it. So you know it's really solid. And you have the faith that when you turn it on, you let a computer do all the execution, then it's going to work well. And even when you're sleeping at night, you're confident that it's going to keep on making money.
Nice. Whenever you have some sort of an algorithm which end up to not working anymore, do you adjust it or do you just throw it to bin and find a new one?
Yeah, you basically have like a systematic way of improving them. So like algorithms, they all have like parameters, right? So by parameters, for example, you could have an algorithm which is based on like kind of EMA of the price. You could be using like the 5-minute EMA. Now, there could come a stage where the market has changed a bit and that 5 minutes needs to be adjusted to a 3-minute EMA, but otherwise the same algorithm pretty much works. And you basically have methods of figuring out when we call it decay in the industry. So when has a strategy decayed? And all strategies decay because the market starts to price them in. If you have a strategy that's working really well, right? If somebody else tries to make a strategy on the market, their model will pick up what you're doing because your strategy itself has impact on the market. Right? If I go out and I buy 100 futures or something.
I never knew that. That's so interesting.
Yeah, but it's just supply and demand, right? It's like if I go out and I buy $10 million of Tesla shares, that's going to push the price up. That's how markets work, right? Supply and demand. So if I have a strategy that's doing really well, and I size it up and I'm trying to like print money on it, then the strategy itself starts having impact on the market. And other people's strategies start picking up your strategy and then your strategy decays. So you need to change it. And sometimes the strategy decays so much that, like you said, you need to throw it in the bin and just start a new one. You need to come up with a fresh idea. And sometimes you just need to tweak it a little bit.
Yeah.
If you make a really good strategy, it can run for years with just tweaks. But sometimes strategies disappear overnight. And in high frequency trading, a lot of the strategies we do, they kind of revolve around understanding how the exchange works really well, as well as the product.
Yeah.
So some exchanges have quirks in them that mean you can like get your orders in faster than other people. And if you know how those quirks work, then that's like itself is a source of edge. And you can use that to make money as well.
So that being said, do you think that every algorithm strategy has some sort of a deadline? Because there's a lot of traders looking for algorithm strategies on the internet, and they find something like martingale or whatever, and they put it on the MetaTrader and it doesn't work.
Mate, literally, it's like, so I'm talking about stuff I did for like a proper institutional hedge fund. Even if you go on CTrader, somebody makes a bot that just works, right?
Yeah.
And somebody buys that bot. If that bot starts doing well, everyone will buy the bot, and then there's no advantage in having the bot because everyone's running the same strategies. Every strategy has a deadline.
Yeah.
Because if it works, people will start using it. And every trading strategy, the more somebody uses the exact same thing, is going to stop working because you need edge. Like to win in trading, it's not just about doing the right thing. You need to do things better than other people. And that's really key. So if you're doing the things the same as everyone else, that's why it's getting really, really hard to get into trading.
Yeah.
Right? Because everyone, they're going to shows like this. They're learning from you guys, smart guys, right? They're reading books about trading. They're understanding how markets work. That's the minimum level of knowledge you need now to succeed in trading.
Yeah.
If you haven't even reached there, you're finished. and on top of that, if you actually want to make money, you need to do even better than that. You need to do even better than you can find in the books. So that's why I say when somebody comes up to me and they say, I want to learn about trading, I'm like, okay, yeah, read the book, but the book isn't going to tell you everything, right? Go to the course if you want, but honestly, if the guy selling the course was a good trader, he would be trading, right? Like he wouldn't be selling the course. You know what I mean?
Yeah.
Like you can learn from this guy. He'll probably tell you something useful, but if you want to be successful, you got to do even better than that guy, right? Because that guy, by definition of the fact that he's selling you a course, he's already finished, right? So the best traders I know, they're not selling courses, right? That's the thing. They're thinking for themselves, and that's important.
That's true. That's true. On a different page about futures market, you said that you are creating a futures exchange, right?
Yeah.
What do you think? Why do you think futures are the best option, or why futures have future? If you know what I mean.
Yeah, mate. So I'll tell you. So in basically the very short way of putting it is, if you trade futures, you're trading on the same terms as the hedge funds, the big banks, the industry about Sharpe ratio. The Sharpe ratio of my strategy was 12. Right? It just didn't lose money because it was designed. It was a machine that would just continuously produce money. Now, any hedge fund, any big bank, nobody trades CFDs, right?
Yeah.
CFDs are for retail. Futures are what institutions trade, okay? And futures are what institutions trade. What that means is, if you trade on a CFD, if you trade on IG or trading 212, right? Those guys are just acting as a middleman, okay? And what they're doing is they're either taking the other side of the trade that you're doing because they know you're a bad trader and you're going to lose money, or if you're a good trader, right? Everyone knows it's A book, B book, right?
Yeah.
If you're a good trader, what they do is they pass your trade through to an exchange, and that exchange is a futures exchange. There are no CFD exchanges. CFDs are not an exchange product. Futures are what trades on exchanges.
Yeah.
Now, what we're doing is we're saying, okay, retail, unfortunately, their access to futures is quite limited. They have to go via broker. They have to go via, various intermediaries. We're giving people direct access to trade on futures for the first time. Now, some of your watchers might know about crypto exchanges, so you can do this in crypto as well. So crypto exchanges, you have direct access to trade peer-to-peer on an order book, and when you put your order, it goes into a central limit order book. The exchange doesn't take the other side of the trade, and you'd match against another trader on the other side. That's never happened in traditional assets before, right? So if you want to, so I'll give you some names. You can look them up, of like various future exchanges. S&P futures, NASDAQ futures, they gold and oil and silver, they trade an exchange called CME.
Yeah.
Right? There's a different type of oil future trades on ICE.
Yeah.
Right? European futures trade on Eurex, right? You go on these exchange websites, you can't, as a retail, as an individual, go and trade on these exchanges yourself, right? It's never happened before. For the first time ever, we're making a futures exchange where retail can just go sign up and trade directly themselves. Individuals can go do it themselves. So that is really interesting, and that's what I saw in the industry while I was working at hedge funds. Is I saw retail just lose money, not because they're bad, but because brokers basically just rip them off, charge big spreads and all that. And we don't make money on spread, right? We don't take the other side of the trade. Like literally, we want our users to make money because then they'll just spend longer on the platform, right? And that's we're a Silicon Valley funded startup. We don't even care about making money. We just want users and we want growth. And that's. Yeah, I think it's high time somebody made that access for retail because honestly, the scales are tipped against retail right now. If you go out there and you go on IG or whatever, right? IG have all this thing like 80% of users lose money. That's not because 80% of people are stupid, right? it's because IG has tipped the scales against their favor. That's what we want to get rid of.
Yeah. I mean, futures are, I agree with that, because there were even examples of like XTB going against the traders, pushing them down, manipulating, because it's not the banking price, so they can do whatever they want. And there's not that many futures exchanges, as you said. There's CME, IC, so having someone who will take care of retails, yeah, it's a good idea.
So any traders that are getting into the quant space, any retail traders getting into the quant space, what are your sort of advices on how to do that? Because I don't think it's popular at the moment in the retail industry.
It's hard work, guys. Okay, I will say, if you don't have some kind of a science or economics background, right, or you don't have to have gone to Cambridge, whatever, right? Like, you need to have been good at maths, physics, some subject with numbers when you're at school. Otherwise, it's not going to happen, right? Quant, it's in the name. It's quantitative. If you're not good at maths, like, forget about it. What you need to do is you need to learn statistics, and you need to learn how to program. They're the two big things, all right? So statistics will help you make a model that tells you where the price of the things that you're trying to trade are going to go. And the coding will help you execute that algorithmically. Because in quant, most of your, it's very hard with a statistical model to predict where the price of something is going to be in a year, right? If it's going to be a year, you can click trade on it. Like, you can execute yourself, but it's very hard to build a model for that. What models are really good for is predicting where something's going to be in 5, 10, 30 seconds, right? Really quick scalping. And if you want to execute on that, you have to execute algorithmically, right? Like, you need a program to do it. There's loads of ways to do it. On our exchange, we have like an open API. So if you know how to code, you can just directly start trading algorithmically on our exchange. That's fine. And we'll have like walkthroughs and stuff. We have docs that show you how to do it.
Yeah.
The coding will help you do that. But honestly, the juice is in understanding stats. You can download data, right, with our data partners, or you can download data from our exchange as well. And honestly, just buy a stats book and start thinking, okay, I want to predict the price of this thing in 30 seconds. How do I make a model to do that? Make a simple model. The classic book that quants read, and for this you probably need like a university degree in a STEM subject, is called Elements of Statistical Learning. Any quant who works in an institutional hedge fund or high frequency trading shop will have read that book. There's like a preface to that if you don't have as much of a math background, called Introduction to Statistical Learning, ISL. That's the book I would read. Okay. It's not about finance necessarily. It's just about learning how to predict things, right? And then you apply that to finance. But I'm gonna have a series of talks about this. So if you guys are interested,
yeah, for those that want to connect with you, how do they reach out to you?
Yeah, so I'm on socials. I post a lot on Twitter and LinkedIn. My name's Anane Kapila, and my Twitter is _Kapila, KAPILA_. I publish articles about my time in the industry, and we publicize our events there as well. We're gonna have some talks. Happy to share the info with everyone.
Awesome. Maybe last question, if I may, about, because I just came about it. What about quantitative trading and AI? Have you got any experience with it?
Yeah, sure. So basically, in quantitative trading, what you're trying to do is create like a statistical model to predict markets, right? But that model is not like, it's not an LLM. It's not like ChatGPT where you can like literally have a conversation with you. It is machine learning in itself, but it's not artificially intelligent. It actually uses very similar techniques to how they built ChatGPT, but just to predict like time series data. By time series data, we mean, you have a bunch of, this stock is this price at this time, this time, what's it going to be in 5 seconds time? So the way we did start using AI in my last firm to help with this. So if we roll back to what I was talking about earlier, I was saying when you build these models, you have a model framework, but you also need to have an idea of what's going to move the market and feed that into the model, because it can't think completely for itself. So AI is very good, actually. You can ask AI at like, AI knows technical analysis, right? If you ask it like, what are some good, easy ways that I can think about how markets move, for example, it'll tell you about moving average indicators, RSIs, whatever, all that stuff, like oscillators. Now, what you can do is you can then ask AI to convert them into code and then easily test them rigorously on whether they actually work or not. And the key thing between like a lot of retail traders and quant traders is like, quant traders do things rigorously, right? So if you go up to a quant and you say, okay, does this indicator work, right? They will take data and they will tell you whether it's going to work, right? It's not like a guesswork. You're not trusting someone, so like some grifter who's telling you like, oh, I use this to make, I got a Lambo. They rented that Lambo, bro. They don't know what they're doing.
Yeah.
A quant will prove it to you mathematically whether this thing works or not. And a lot of them don't work, but the ones that do are golden.
Yeah.
So that's the crucial part there. And AI is like very good at helping get started on that, I would say. But you still have to do the hard work yourself, right?
Yeah,
So
an assistant, rather.
it's an assistant.
Yeah, perfect. Thank you so much.
Yeah.
It's very diverse conversation.
Yeah, I didn't realize we'd have this sort of conversation.
Yeah, happy to. And, I think like the retail community on the future side and the prop side is not as aware of these things. It's interesting. I also come from like crypto background.
Yeah.
Crypto community is like super aware of like all these strategies and like, different quant trading firms, different quant hedge funds. So good to share the knowledge, and happy. Anyone feel free to reach out to me on Twitter. That's where I'm most active. Happy to answer any DMs about my time and experience.
Yeah. Thank you so much. Yeah.
Cheers.
For the effort.
Bye-bye.